All right, thanks, Chris. Thanks for having me to talk about this subject today. Welcome, everyone, to Preventing Fraud Without Segregation of Duties. My name is Christopher McKellar, a partner with Malden Jenkins. I work in our governmental assurance practice, and I've been with the firm coming up on 20 years now. I've worked with several governments, large and small, throughout the Southeast. So I've seen some with uh, good segregation of duties and some that's not quite as good, and they implemented some mitigating controls. In this session, we'll discuss key functions that ideally should be segregated, as well as ways segregation of duties may still be able to exist even with a small accounting staff. We'll also discuss what the governments could do to mitigate a lack of segregation of duties. And we'll start out by discussing the fraud triangle and the importance of reducing the opportunity for people to commit fraud. We'll walk through some important internal controls to have in place and what controls should be segregated. And finally, we'll talk through some compensating control ideas. Before we get started, if there's anyone that has any good compensating controls that you may have it in place at your government, feel free to send those my way. And I may be able to add those to future presentations. Towards the end of the presentation, I've listed out several that I've seen over the years, but you may have some that I haven't seen, or some different compensating controls. First, we'll talk about the fraud triangle, the opportunities, pressures, rationalization. When an employee has a reason for committing fraud, gets the chance to do so without getting caught, and can come up with a justification for their behavior, they're more likely to commit fraud. Now, this doesn't mean that if all three conditions are there, a person will commit fraud, but the chances are much higher. Internal controls should be in place to reduce the opportunity. We can't do much about the pressure that people are under or their rationalizations for behavior, but we can implement safeguards to reduce the opportunity to commit fraud. So first, on the fraud triangle, the opportunity. Opportunity includes access to bank accounts, access to cash, access to inventory, other assets, and the ability to process transactions like error corrections, customer account adjustments, journal entries of that sort, where you can draft the journal entry, post it, and approve it. That often lends itself to fraudulent transactions. Oftentimes, the person with the most opportunity is the person who's been with the government for a long time to know what people are paying attention to. It's also the person with a deep understanding of the system, the person that everyone goes to because they've been there a while. They have an opportunity, and if they have the means, it's more likely that they could commit fraud without anyone knowing. And a lot of times it's the person that's been there a while that you wouldn't suspect would commit fraud. A lot of times it will be something small to see if anyone's watching, or it could be a legitimate mistake that no one picks up on, and the person gets more comfortable that the opportunity is there. And that's where the internal controls and mitigating controls can shine a light on the different processes. fraud often happens in darkness. So by shining a light on that process with internal controls, you can reduce that opportunity to commit fraud. Next, pressure. So typical pressures, pending bankruptcies, divorce, addiction to alcohol, drugs, gambling, keeping up with the Joneses, trying to maintain that status in the community. There could be a lot of motives or pressures that lead someone to commit fraud. If someone feels that they're at the end of their rope, it may be a condition that leads to fraud. People will do a lot of things that they wouldn't normally do when they feel they're backed into a corner. Next is rationalization. So this is convincing yourself that it's okay. Rationalization would seem to me to be the easiest hurdle to clear. Most people can rationalize any behavior that they have. These could be examples. They don't pay me enough for what I do. I'll pay it back when I get back on my feet. The city has plenty of money, or the city's wasting money on whatever XYZ. Oftentimes, people have different priorities than what the government is looking at. Another one, everyone else does it. I've often heard well, I take the mail to the post office or take deposits to the bank while I'm on my lunch break, and that's not something they're paying me for. So there could be many different rationalizations that people have. All right, and that brings us to poll question number 1. What key factor was attributed to the largest percentage of occupational fraud? Lack of competent personnel in oversight roles, poor tone at the top, or lack of internal controls? And I'll give everyone a few minutes to answer that before I move on to the next slide. Because the next slide will have the answer to it and explain a little more. All right. So the answer there is lack of internal controls. The Association of Certified Fraud Examiners publishes its occupational fraud report to the nations annually. And in that report, it stated that the lack of internal controls attributed to approximately 29% of occupational fraud, override of existing controls attributed to 20%, and lack of management review attributed to 16%. So as you can see, these 3 items make up over 50% of occupational fraud cases. With good internal controls, you could drastically reduce fraud by implementing some controls and management review or compensating controls. Internal controls. Sometimes a small department has a limited number of employees, making it difficult or impossible to establish adequate segregation of duties. Compensating controls are less desirable since they typically occur after the transaction's complete. Therefore, compensating controls should be viewed as a last resort and shouldn't take the place of segregation of duties. Oftentimes, you can use employees outside of the finance department to segregate duties further or use them as part of your compensating controls. Obviously, this would involve some training on what to look for, um, and a process on who to ask questions of. You wouldn't want to use an employee for a signature on a document just to say someone's reviewing it. You want to make sure to explain to the employee that they're signing their name on the document, saying that they've reviewed whatever it is that they're signing. So they should understand what it is that they're looking at and what would be considered unusual. And if they have questions to ask, don't just pass on it and sign your name. Here's an example of a small finance department that we'll be discussing surrounding internal controls over receipts and disbursements over the next several slides. As you can see there, we have finance director, 2 accountants, and remember that you can pull in other employees at the government to help out in some of the situations. I'm sure there are some governments with smaller finance departments than this, but this is just kind of a smaller finance department that we would typically see. So first is disbursement controls. Here's some typical purchasing controls: having an approved vendor list, periodic review of changes to the vendor list, POs that are reviewed to ensure that the expenditures are within budget. POs are pre-numbered, sequence accounted for regularly. Unissued forms are controlled. Now, this could be purchase orders or checks themselves, making sure that any of those blank forms are controlled by the government. And retain the voided documents. If you have a voided check or a voided PO, and then later on, after you've voided it in the system, that check clears the bank, you want to have that voided document to keep people from using that, but also to use it as research to go back and find out why that cleared the bank. Some segregation of duties in this area. Purchase requisition is entered by the department head and approved by the city manager. The PO is signed by the finance director. And if the finance director receives the invoices from the department and approves, then the accountant would enter the bills for payment. And then accountant 1 is assumed to not have access to the approved vendor listing. The accountant entering the bills shouldn't have the ability to make changes to the approved vendor list. As a compensating control, if your system has the ability to produce a vendor change report, you could have someone like the city manager or a board member that reviews that vendor change report and verifies that the changes are legitimate, or ask questions if they see something is unusual. And you would also want to provide them with supporting documentation for the change, whether it be a new vendor or a change to the vendor name. Some general disbursement controls. Bank accounts are authorized by the governing board or appropriate level of management. Individuals responsible for signing checks are authorized by the governing board. Making sure that the mechanical check signers or the signature plates are safeguarded so that someone couldn't use those and print their own checks without anyone knowing. Dual signatures on checks over a certain amount or on all checks. Especially with a smaller government, I would think you would want dual signatures on all checks. Most of the larger governments already have dual signatures as a requirement. Review and approve all check registers. Now, when we're talking about review and approval of check registers, I would consider making it a control that the person reviewing and approving the check register would initial each line of the check register to eliminate the opportunity of having a check that was run in a separate batch or a check that was in that batch uh, that was not included in the support. So the person would go in each check in that check register and initial that they've reviewed the check and the supporting documentation. Prohibit checks payable to cash and use a positive pay system. Most banks have the ability to offer the positive pay system. Um, I've seen the positive pay system work well for many governments as long as you have it set up appropriately. And it's not just one of those things where you're inundated with exceptions and overwhelms the person that's reviewing the exception reports to where they just approve everything. But this is a great way to catch internal or external fraud. I know a lot of governments that I've worked with have have come across external fraud through this positive pay system. You know, I have heard some governments, whenever they get those positive pay reports, it would give them exceptions for things that weren't really exceptions. So that's where you work with the bank to modify the parameters so that it's giving you good information that can be approved or denied. Um, the key to the positive pay system also is to review those exception reports in detail each time. Don't just skim over them and approve everything. Some segregation of duties. Checks require two signatures with the option of the mayor, finance director, city manager, board members could be one of the signatures on it as well. And review of canceled checks by an authorized signer. So by reviewing the canceled checks, you want to make sure that the signatures are the same from check run to check run, that one person isn't forging another person's signature. Oftentimes, the bank has a report that they can provide of canceled checks. And, you know, even if there's a fee involved, it could be well worth the small fee that they charge. It is important that the person signing the checks has this supporting invoices and that they are reviewing the vendor names and amounts with the supporting documentation. It's easy to set up a company that is very similar to a legitimate vendor's name to misappropriate funds. You could have Malden and Jenkins LLC versus Malden and Jenkins Inc., and you could take the same invoice from Malden and Jenkins LLC and run that back through on a different pay run to Malden and Jenkins Inc., where you've set up a different bank account for that vendor and misappropriate funds. You know, hopefully your accounting software has a feature that checks for duplicate invoices. But if not, it's a good idea to review the general ledger for amounts that are the same to determine if there is a duplicate invoice or invoices going to similar or vendors with similar names. to help try to catch some of that. This is also where an approved vendor list can help catch any new vendors or a vendor change report, so that if there's a new vendor added with the same name or a new vendor added that the government doesn't do business with, this is something that it can be caught early on. All right, check processing disbursement controls are prepared after the checks are prepared after proper matching to supporting documentation. Supporting documentation is appropriately marked with canceled and has the check number. This is another way to try to catch any duplicate invoices that are coming through. Signed by an authorized signer. Dual signatures obtained if it's required, which I would suggest that you would always have dual signatures on checks. Check for the clerical accuracy, pricing, quantities received, the brand names, etc., to the vendor invoice, and scrutinize the vendor invoices. You know, with technology now, you could take an invoice and change out a logo fairly easily. So, you know, scrutinize those invoices or any other supporting documentation when it comes through and you're processing those checks. Check signer reviews all supporting documents. Promptly record those checks to the general ledger. Some segregation of duties. Checks require two signatures with the option of the mayor, finance director, city manager, board member, as we mentioned earlier. Review the bank statement prior to reconciliation and the review of the bank reconciliations. With the marked canceled, you might also want to consider having a control in place where you're reviewing the vendor payment history to determine if you've paid that same amount to them recently, just to research and make sure that it is a different invoice and not just the same invoice that's run through again that may have, you know, a different invoice number on it. One other compensating control could be that you could have the bank statement sent directly to the mayor, city manager, or a board council member to review the bank statements before they get to the person that's reconciling the bank statement, just to look for any unusual transactions before it gets to that point, and helps with the opportunity of someone doing something weird on the bank reconciliation to hide something that may be fraudulent. And that brings us to poll question number 2. What percentage of victim organizations modified their anti-controls, fraud controls following a fraudulent event? And I'll give everyone a few minutes to answer that. One other thing on the positive pay, as you all are answering the poll question, is, you know, you can set it up with the bank to confirm the payee and the amount, and that would eliminate some of those exceptions. Also, one thing that I think we'll get into a little bit later is, you know, electronic payments with ACHs, EFTs. things like that, or card payments, which, with card payments, there are um, issues with those as well. But that's a way to reduce some of those paper checks. It's a little more convenient with the ACHs and the card payments. All right. So the answer to this one is 81%. I expected this percentage to be much higher after a fraudulent event. Um, but as mentioned in that annual report um, earlier, they said that 81% of um, victims put some other controls in place after a fraudulent event. And of those 81%, 75% increased management review procedures, and 64% increased a use of proactive data monitoring and analysis, which is a good mitigating control. This could be because the controls outweigh, or the cost of the controls outweigh the fraud that would be expected. Um, so maybe that's why it was only 81%. But there again, I would have expected it to be a lot closer to 100%. More on disbursement controls. So individuals responsible for the following should be separate: the initiator of the purchases, which could be done by a department head; approver of the purchases by the city manager; receiving the goods or services, the departments; preparation of the checks by one of the accountants, not a signer on the check; and then signer of the checks, two dual signature, which could be the different positions that we mentioned earlier, and then recording the accounts payable by a separate accountant. All right, on the electronic disbursements to vendors, electronic disbursements to vendors is becoming more prevalent these days. You want to make sure that you have good controls in place surrounding these electronic disbursements. They are often easier and do save time and paper for the government, but you still want to have good controls in place surrounding the electronic disbursements. So have good internal and information technology controls, written agreements with the banks and the third parties for any electronic disbursements. These next two with the dual controls, I think these are really important. Similar to the dual signatures on the checks, dual controls for authorizing non-repetitive transactions, and dual controls for the establishment of repetitive transactions. Establishment of dollar limits for authorized personnel to make certain electronic disbursements. Um, Good use of passwords and PIN numbers. And then callback verification. This one is, I think, very important. And I've actually seen a couple of different governments that didn't have callback verification in place. And, there was fraud that took a lot of money because it was on a construction contract that they had. So it's something that could be very costly. If you get an email from a vendor requesting an account number change, be sure to have a process in place to verify that it's a legitimate email. Oftentimes it's, calling the company, and not necessarily just calling the number that's in the signature on the email, actually going to their website and getting in contact with them. I have seen a couple of instances where fraud has occurred through a fraudulent email requesting a routing number to be changed, and the government didn't verify that it was legitimate, and they weren't able to get that money back. Bad actors do have a way of knowing who you're contracting with, and they can try to get the routing numbers changed. There's also ways that they can get into an email chain that originally was legitimate. And once they get into that email chain and you think it's legitimate, they can still try to get you to change account numbers or routing numbers without the company knowing that it's going on. A few fraud risk: vendor email compromised, phishing emails sent to governments. There's been a tremendous uptick in phishing emails over the past couple of years, and wire payments initiated to a fraudulent account. Continuing on with the electronic disbursements to vendors with purchase cards, I have seen purchase cards get really popular. Some people have scaled them back some due to the issues with fraud related to purchase cards. But you know, these can save a lot of time as long as you have good internal controls in place. Um, Credit card statements are distributed to the appropriate individuals by the accountant. The cardholder then submits the credit card statement with attached receipts to the department head. The department head approves the supporting documentation and submits it to the finance director. And then the finance director pre-audits and approves those for payment, where a separate accountant processes for payment. In this scenario, though, if the finance director is the cardholder and department head for the finance department, then you would want a different department head to review and approve for payment, and knowing what the finance director should be purchasing on their purchase card. Another thing is, if board members have a purchase card, making sure you have a process in place to review those with someone who isn't afraid to ask questions if there's something on the purchase card that they wouldn't expect. You could also consider having the city manager review and approve the supporting documentation. Oftentimes, small governments have many employees that wear many different hats. So, you know, get as many people involved as you can and is necessary so that you have proper controls in place over the purchase cards. Uh, Timely preparation and review of the bank reconciliation. One thing I mentioned earlier for compensating control, or maybe I hadn't mentioned this yet, but I've seen where the finance director would provide a budget to actual comparison to the board with the supporting detail of the balances to the board monthly. I know oftentimes governments have a budget to actual that's in summary form that they present to the board, but having that detail behind it that they can review, you know, it is a good compensating control, especially at your smaller governments where there isn't as much activity. Um, let's see. Reviews outside the finance department used to help with segregation of duties. must be appropriate level of management or governing board member, review cash disbursements listings periodically, review cash disbursements to budget periodically, and perform those analytical reviews to see, does this make sense that this disbursement balance is so low or so high at this point in the year. Right, so poll question number 3, control activities can be defined as a means to an end, authorized procedures, the particular category in which a control is placed, the actions of people to help ensure that management directives necessary to address risk are carried out. And we'll give everybody a few more seconds to answer this. All right, so the COSO definition of control activities recognizes that internal control is affected by people at every level of the organization. Control activities are more than just a means to an end, and they're not limited to authorized procedures. Control activities are often overlapping categories. So the answer to this one is number 4. Cash receipting controls. One theme you'll notice over several of these slides is timely review to catch things as quickly as possible. The longer you let things go, the more opportunity it is to have a larger fraudulent event. So you should perform daily reconciliations of cash received through walk-in traffic and the mail, reconciliations of cash register tape to the cash drawer, daily cash receipts, postings, etc. Deposit cash receipts on a daily basis. I know this is something in the elected officials that oftentimes they seem to hold deposits for a long period of time. And I would suggest depositing those cash receipts on a daily basis. Monthly or even daily reconciliation of general ledger to the bank balance. You know, this can be easier at smaller governments where there's not as much activity, but making sure you're doing those reconciliations and doing them timely is really important. Some segregation of duties. One accountant collects cash and enters it into the system. Daily deposits are reconciled by another accountant and reviewed by the finance director. If it can be video recorded, especially with cash collections, you know, that would be ideal. Bank deposits are taken the next day by a finance employee or another department if you can get the other departments involved and have a police escort with them. And then another accountant prepares the bank reconciliations and they're reviewed by the finance director, or you know, they could be reviewed by city manager or someone on the board as well. Individuals for the following or the responsibilities for the following should be separate, relating to cash receipting. Opening the mail or copying the checks received could be done by secretary. posting cash receipts by one accountant, preparing deposits uh, by the accountant and or finance director, depositing the cash receipts. This could be someone in the finance department, or if the finance department's really small, have someone from another department taking those to the bank with the police escort, reconciling the bank statements by a different accountant, and then reviewing the bank statements and bank reconciliations by the finance director. And as I mentioned earlier, if you have the ability to send the bank statement to the mayor or someone on the board that could review that before it ever gets reconciled. Cash receipting controls. All employees receiving cash should use pre-numbered receipts or a cash register. All checks should be restrictively endorsed upon receipt. Standard daily cash register reconciliation forms should be used. I've seen at a lot of governments, especially in the utilities department, there's a specific cash reconciliation form that's used that the preparer signs and the reviewer signs as well after they've recounted and reconciled. Cashier funds should be counted and reconciled at the end of each shift, and the reconciliation should be reviewed by a supervisor. There again, if you have cash receipts, it's often good to have two people there while the cash is being counted. Someone independent of the accounting department should open the mail and restrictively endorse the checks, as I mentioned on the previous slide. Uh, the same person should also log each of those items that come in so that those can be reconciled and have record if any questions do come up. The accounting department should record the checks in the accounting system and deposit the funds daily. And then a third person should periodically compare the deposit slips to the daily log of incoming checks to ensure that all the receipts were deposited and posted to the general ledger. Um, Bank drafts, EFTs, and internet payments. With electronic receipting, reports identifying the individual receipts should be generated on a daily basis and reconciled to the funds deposited per the bank, oftentimes the next day, to make sure that you have a good point of reconciliation if something were to get missed. Or often if somebody's holding back some cash and using it, or checks and using it for themselves and then depositing that cash back a week or two later, this reconciliation would identify that quickly. And poll question number 4: what are ways to overcome a lack of segregation of duties? Surprise audits, management review, anonymous hotline, or all of the above? And we'll give everybody a minute to answer this polling question. And we'll go over some of this in the next few slides. Right. Hopefully everyone's had a chance to answer this one. So the answer to this one is all of the above. As you'll see over the next few slides with some of the compensating controls, surprise audits are a great thing. Obviously, management review and an anonymous hotline. I've heard from some people that this anonymous hotline didn't work out as well as they had hoped. Some people loved it. I think a lot of it has to do with the messaging around the hotline, getting that information out to employees, and having a process in place for where those tips go to begin with, whether it be, the mayor or uh, the government's attorney, that then gets other people involved as necessary and directs the questions to the department that the anonymous tip is about. Um, Next, we'll talk about compensating controls, which are controls designed to compensate for the increased risk. Compensating controls are less desirable since they typically occur after the transaction is complete, and therefore compensating controls should be viewed as a last resort and should not take the place of segregation of duties. Having said that, though, compensating controls can be extremely effective. Designing compensating controls, um, when designing compensating controls, you might want to consider these items. Documentation, which creates a formal document which clearly outlines the steps necessary to execute the compensating control. Uh, Documentation creates a roadmap for someone to follow. You might even want to consider creating a checklist for someone to use. This would be a great way to get buy-in from employees in the department and make them a part of the process of documenting the steps of the compensating control. Approval: ensure documentation is reviewed and approved by management regularly. Systems access, people, and functionality change. So it is important to determine if the compensating control serves the purpose that it was intended. Training: ensure that the appropriate staff are trained. They need to understand the risk and review the procedure documentation and be clear on the method and timing. It is important. This was an important one to me, especially if you're using an employee from another department that is not familiar with the processes and procedures. Here again, you don't want someone just signing off for the sake of signing off. You want to make sure that the control is effective if you're having another employee take time to perform the control. And then periodically review the control to ensure that it's effective, especially when the control is new. Review is another important aspect. You should review the controls early and periodically just to make sure they're operating as intended. You don't want to have extra controls in place that aren't really doing anything. So the best way to overcome a lack of segregation of duties is to create more transparency in the process. A compensating control is never as good as creating a control within the system itself. So the compensating control has to prove and must go above and beyond what the system itself could have provided. Therefore, the compensating control would need to be more than just a signature on a reconciliation. the person performing the task needs to understand that they are reviewing, knowing that there's reliance on them. A good example of this would be to have the reviewer sign off on each line of a report or reconciliation with comments beside each line. Um, the compensating controls should be more rigorous than just your general internal controls. Providing the bank statements to someone other than the bookkeeper, whether it be the mayor, county manager, one of the board members. Um, I think I've mentioned this a couple of times, but having the bank send the bank statements to someone other than the person who's reconciling the bank statement, this person would open the bank statement, review the transactions for appropriateness or any unusual items. Relying on one person to receive those bank statements and reconcile that bank statement creates an opportunity for someone to commit fraud. And fraud can be decreased just by them knowing that someone else is watching. You could also, if you had the ability, have some other department review the reconciliations to ask any questions. Obviously, you need to train the other departments on what things should they be looking out for, and have a process in place for them to ask questions of someone other than the person performing the reconciliation, and make them feel comfortable asking those questions. Surprise audits, whether it be internal or external, these surprise audits can be done by an internal person that is outside of the accounting function, like a board member, mayor, city manager, county manager, something like that. You could also hire someone externally to come in and perform certain tests on a limited basis to give an appearance that someone else is watching. A couple of examples of surprise audits: inspect all cleared checks for a particular time period, agree all receipts to deposit slips for a time period, inspect the bank reconciliations, make sure they're being done timely and appropriately, review a monthly budget to actual report and actually, dig into it to make sure that things line up like you would expect. Um, if you have the ability to run something out of the system that shows a report of all new vendors added during a time period or change in vendors, this would be a good compensating control. Request a report of all new employees added during a time period or any changes to employee records. I have seen where someone's tax withholdings was increased dramatically so that at the end of the day, when they do their tax return, they're getting a lot more back. But if you looked at their net check from week to week, you wouldn't notice any significant increases in the employee's pay. And then the anonymous hotline that we mentioned earlier, like I said, I've heard good and bad related to the anonymous hotline, but it's definitely an option as long as you get the right message out about the hotline. And then periodic review of journal entries, making sure that that person isn't afraid to ask questions. What is this journal entry doing? And does it make sense based on the documentation that's provided? Detailed review of balance sheet and income statement transactions. Detailed review of certain transactions or a sample of transactions throughout the year by city manager, council member, or an external party that you have come in as a consultant to review those. Some governments are lucky or unlucky, depending on how you want to look at it, to have a council member that has a background in finance. If you do have that, I would certainly leverage them as part of your internal control structure. This could also be performed by a third-party advisor. A lot of systems have exception reports or change reports that can be run for a time period. Uh, like we mentioned earlier, an example, changes in a customer master file or a payroll master file. It's important that this exception report is run by someone other than the person who has access to making those changes, because if they're reviewing it, they could go back in and make other changes and make it look like nothing ever happened. And this report should be reviewed line by line by a supervisor or a manager and saved as documentation should there be any questions later on. This just a few examples of exception reports: compensation change audit, benefits change audit, time override audits. This is something that could be done internally or externally. Prepare budget analysis and cost trends to investigate any discrepancies. This next one's a pretty big one. Performing analytical reviews, identifying predictable relationships, and perform this analysis for any unusual trends. You may want to look for anomalies when job assignments change or surrounding vacations, if you have mandatory vacations throughout the year. Looking for unusual trends around that time period is a way to focus in on certain areas. Reassign reconciliations to someone outside of the process, and forced vacations and cross training. Cross training and having someone periodically do someone else's duties in an unplanned time period would help. Educating employees about policies and best practices helps build a culture of awareness and ensures everyone understands their roles and responsibilities. Data encryption, penetration testing, vulnerability assessments. These are also good mitigating controls. Conducting regular assessments to identify any vulnerabilities in your system or network will help prevent definitely some external fraud, but certainly internal as well. Uh, Operational assessments of various departments is also a good idea. When I've seen operational assessments done on governments, there's been some good controls that have come out of that operational assessment. So, that's something good to consider as well. And then along those same lines, access controls is a good compensating control, or just a good control in general. Implementing strict controls to manage user access to systems, applications, and databases on their roles and responsibilities. This could help prevent unauthorized access and reduce the risk of inside threats. And one last point that I wanted to make before I closed it out is to use others in your network group or peer group to bounce ideas off of related to compensating controls. If you're dealing with a certain situation, chances are someone in your peer group is got some good compensating controls that maybe they could share with you. You also may have the opportunity to use your peer group from surrounding governments as part of your compensating controls. Uh, Peer groups can be a great resource. I have seen where a county has a city within it that the finance directors are um, friends, and the county would send certain reconciliations um, over to the city for that finance director to review it and ask for any questions, because they can take a step back and look at it in a different way. Obviously, you wouldn't want to share sensitive data with anyone else, but there probably are certain situations where you could use your peer group to help with compensating controls. And that's all that I have for you for this session. My email address and everything is in the slide deck. Should anyone have any questions or anything that they want to reach out to me later, I'd be glad to help. And thank you, Chris, for having me and letting me present this interesting topic.